Welcome to It's the Economy. FY25 was a tough year for the microfinance industry when their loan defaults rose, credit cost or the provisions you keep for bad loans went up to 6.9% from 2.3% in the previous year, FY24, with the microfinance SRO, MFIN, implementing new guardrails like don't give more than 3 loans per borrower, cap the loans at 2 lakh rupees, outstanding loans per borrower, etc. The assets under management of MFIs, microfinance NBFCs, declined, as did new borrowers, number of unique borrowers. Ahead of the Q2 results, the question we are asking is, has the number of defaults declined? And have the loans to MFI borrowers started increasing? Joining me to discuss the state of the MFI sector are Dr. Alok Misra, the head of MFIN, the SRO, the self-regulatory body of microfinance, and Jinay Gala, who is the director at India Ratings. Gentlemen, good morning and thank you very much for joining me. Dr. Misra, to start with you, you sent me some very helpful data. This is indicating that the number of defaults are falling, or rather stressed loans, days past due. But the total amount of loans coming to the MFI sector is not yet increasing. Is that a fair description?
Yes, absolutely. First of all, good morning to you and pleasure to be here. Yes, you have absolutely put it spot on. See, what is happening is, if I take you through the impact of the guardrails in terms of credit underwriting discipline, almost 99% improvement has happened. I can give you the figures. On credit quality, yes, credit quality has improved. If the disbursements would have picked up, it would look almost normal because of the denominator impact. And the disbursements, as you rightly said, have fallen drastically. And typically, we would expect in a quarter around 85,000 crores to 90,000 crores of disbursements, which has come down to almost 50,000, 48,000 crores in the quarter. And that is primarily because of a steep fall in the liquidity. And if this continues, even the improvements which you see in the field, that will be difficult to sustain. So the need of the hour is liquidity. And that is why we have done quite a few things. We have requested the government. I will detail you later. But your description is very apt.
Okay. So you're saying that if the liquidity doesn't flow for borrowers, then there can be a problem of bad loans rising. Is that right?
See, bad loans rising or not, but not going beyond this state, because we have right now, as I said to the figures, 1 to 60 is now 1 to 60 days demand past due is around 2.28%. It would be difficult to bring it further down.
Okay.
Because the borrowers, we will not be able to disburse, the base will not increase.
Yeah.
And second, the defaults may also in pockets increase, because if the borrowers in microfinance see that there is no point giving back the repayments if we are not going to get another loan, that may further increase by a few notches point.
Fair point. Fair point, sir.
The whole cycle will come to a stop, I would say.
Yeah. Okay. So to keep the cycle, even the virtuous cycle going, fresh loans will have to be given.
Yes.
Jinay, let me come to you. I have both your data as well as ICRA's data. Both of you are expecting a fall in the credit cost in the current year. My question to you is, should we expect it in the quarter which results are due now? Will we start seeing the fall in credit cost now itself?
Thanks, Latha, for having me. Good morning, everyone. If you look at the segment had already seen the peak credit cost and peak stress in Q3 of FY25 and Q4 of FY25. Going forward, what we are envisaging is that the stress is largely stabilizing, in the sense it's stagnating at current levels. We would have already seen the worst for the sector playing out in somewhere in Q3 and Q4 of the last year. But going forward, what we see is that still, if you look at the Q2 as a sector, is still a seasonal quarter, where if you look at where there have been a lot of festives in place, and also there has been a widespread monsoon where there has been also flooding challenges which has come up. This would have definitely impacted collections for a lot of the MFIs players. And also there has been a ground level of attrition which has also been impacting on the collection front. So definitely what we feel is that there could be some amount of inch up which could be there in the PAR numbers, but that would vary from players to players in this segment. If you look at the larger NBFCs who have a wider support on the debt and the equity capital and have a strong sponsor at the top, would still be navigating these challenges quite well. But there is a lot of concern which is still there on the mid and small size MFIs, where we feel that the debt funding is getting very slow because of the asset quality challenges. And for them, the headline numbers would still look quite higher in this current quarter, largely because if you look at a lot of them have seen their loan books shrinking to a larger extent, in the sense there have been players whose loan books have shrunk to around 40 to 50% in last 1 year. So, and optical basis also, we see the headline numbers would stand elevated. And if you collaborate that also with another challenge which comes up, is that if the headline number stands elevated, that leads to some amount of challenges playing out on the debt covenants.
One minute. What are you saying?
Lenders have.
1 minute, Jinay. What will be elevated? Will the default be elevated, or will AUM be elevated? I didn't get what exactly you're saying.
Sure. So if you see the defaults would still remain, I think so. It would not plateau. It would largely plateau or stagnate at current levels, but it would vary from players to players.
Okay.
Where if you see the headline GNPA numbers would still remain on the higher side.
Okay.
But we have seen the challenge is more on the disbursement front, and I think so that is the area where we have seen the disbursement is slowing down to the end borrower. And that is also collaborated to the fact that the funding and the debt funding for the sector has gone very slow.
Okay.
And that has been largely for mid and small size MFIs, which I was talking about.
Fair point. That's actually exactly what Dr. Misra is also saying, that we have to now ensure that more funds flow to the sector. Dr. Misra, one of the fears raised by some agencies, including India Ratings, is that this group lending model, JLG as we call it, joint lending group model, has suffered very inadvertently because of COVID. People started paying digitally, and that broke the group meeting together and putting pressure on those who were not paying. You know, that the group feeling declined. Would you agree? And if that is the case, it will take long to build?
Yeah. So I will try to answer it in a different manner. See, the JLG concept, the group concept. See, right now, the loan average ticket size in microfinance is around 45,000 rupees.
Okay.
You can take it 50,000 rupees. And these are unsecured loans. So the JLG concept, the group concept, has two functional things. One, which is, of course, comes from the name, which is the joint liability. That might have got weakened. I totally agree with that point, because we see in field, as the loan sizes increase and society becomes individualistic, the taking of liabilities in case of other personal default is weakening. But as a model wherein everybody comes at a central place and the loan officer meets 6 or 7 persons or 5 persons, and that reduces, it's got a lot of operational cost reduction processes involved. So on that side of liability side, yes, there are weaknesses there. The meeting attendance has also suffered because of digital collections and all that. But as an operational mechanism to bring people together, and we have operational efficiencies into the cost structure, that still continues to play a vital part. And it is very difficult to envisage that you lend 50,000 rupees loan, and where you have weekly or fortnightly or monthly collections going to the centrally designated place, and you can do it individually and within the stipulated cost structure in the current regime which we follow.
Okay. So, I mean, that is one problem. The second problem is this Karnataka bill or law, which has clearly freed microfinance borrowers from repaying unregistered entities. But that usually weakens, you know, the tendency to repay. Is that creating a problem? Do you see specific problems in Tamil Nadu and Karnataka where this, leeway was given?
Yeah. In Tamil Nadu, we are not seeing any problem. what the figures which we get. In Karnataka, see, this happened in the month of January. Today we are in October. From January till April, we saw a little bit of field level confusion and all that. But as we have interacted with the field officials, done awareness programs and all that, the credit cost still, if compared to other states, is elevated, but it is coming down, tapering down. So I hope the trend continues.
Okay. Jinay, I know you won't take the names of specific banks, but there are a couple of banks like IndusInd, Bandhan, more particularly, and a lot of small finance banks which are doing a lot of MFI lending. And what happens to NBFC-MFIs usually happens to the bank MFIs as well. Should we expect any nasty surprises in the banking results, or do you think the nastiness is over and now we will see improvement in the MFI portfolios of banks?
Got it. As I stated earlier, I think so the peak already has been passed for the sector in Q3 and Q4. But going forward, as you rightly stated, that this space of MFI is getting vacated a lot. Where if you look at the vacating is happening more from the banking side and the SFBs, where they have shrunk their loan book and then their exposure to the MFI. So what we feel is that whatever the pain would have been there would already have written off. And there would be some amount of percolation which would carry on in this FY26 for the sector. And this would largely be the trend for the larger banks which are there in the space. But if I compare this with the mid-sized NBFCs or mid-sized NBFC MFI, there we still see that the headline numbers would be on the higher side. The credit cost shocks could still continue. And the larger challenge, what we are seeing here is that the banks have gone very slow in terms of buying out the MFI portfolio. If you look at the MFI portfolio tends to qualify for PSL. And because of the challenges on the loss estimation and the losses which have increased for the sector, a lot of this liquidity which was available to the MFI, NBFC, MFI is getting dried up. And that is largely the reason that the banks have gone slow in their debt disbursements to the NBFC, MFI, and also their buyouts from the PSL side has gone completely slow. So technically, banks are very cautious in taking their exposure on the MFI, and they have been vacating the space quite fast.
Okay. Got your point. And Dr. Misra also was saying that people have to loosen their purse strings. Normally, Dr. Misra, someone comes in, the private equity comes in, NBFC, MFIs, sponsors come in because they see the situation. Do you see the AUMs or the loans lent to MFIs increase at all? Is there somebody who is able to take the longer, larger view?
I think as we were discussing about the Q1 results, Q2 results, or half year one results, I think once they see the improvement, that is one factor which will kick in. The most important factor on which we are banking on, I think, is we have made a request to it, and I hope it is under examination, advanced examination by the ministry. If the credit guarantee fund is instituted soon, I think that will give the needed confidence, because everything in the field is okay. The portfolio quality has improved, the underwriting has improved, over leveraging, even the pockets are not have become totally minimized. So once the credit guarantee scheme comes from the government, I think banks will, along with the half year one results, I think the lending should start. And the monsoon has also kicked in very well this year, and whatever we see in the rural consumer sentiment survey, there is a huge credit demand. Reserve Bank has also injected huge liquidity into the system, as you know. So all these four factors, I think, I would say that Q3 of this year would be critical for the sector from both liquidity point of view as well as from sustaining the improvements in credit quality.
Okay. Yeah, usually bankers and NBFC lenders are quick to smell when the bottom is there, and are usually quick to rush in, but we will have to wait and see. About the credit guarantee scheme, there are too many asks, sir. There are exporters also who are asking for it. MSMEs are asking. Small business loans are also asking. We have to see how much the government is able to spread the credit guarantee assistance. At the moment, of course, all these are asks. Thank you very much, Dr. Misra and Jinay, for joining us in this conversation and helping us understand. The key takeaway is that the bad news is behind us. But if you want the sector to improve, then somebody will have to open their purse strings, repose faith, and lend more to the MFI borrowers. Let us see if the bank results and the NBFC results show that that courage has returned. Wrap up on Bazaar on that note. Chartbusters coming up.